Here we go. A new year, a new week ahead. Let's see what might be in store for the economy this week. Before we begin, remember to like this video and subscribe for more economic updates. Starting off, we have news of a Federal Reserve governor who is openly warning the stock market may be on shaky ground. Despite markets looking strong, Fed Governor Lisa Cook warned, valuations are elevated in a number of asset classes, including equity and corporate debt markets, suggesting that markets may be priced to perfection and therefore susceptible to large declines. It's rare that the Fed sends such a direct warning, so perhaps it's a good time to pay attention. Looking at the week ahead, jobs numbers will likely dominate the economic data. The Labor Department is expected to reveal the economy added 153,000 jobs last month, which would be a sizable drop from the 227,000 added in November. As for December's official unemployment rate, that's projected to come in again at 4.2%, which would mark the 7th consecutive month the jobless rate has landed above 4%. Still, the anticipated numbers seem to be right where the Federal Reserve wants them, with Chair Jerome Powell saying last month, the labor market is now looser than pre-global health crisis, and it's clearly still cooling further, so far in a gradual and orderly way. We don't think we need further cooling in the labor market to get inflation down to 2%. On Tuesday, the Labor Department will release the November Job Openings and Labor Turnover Survey, known informally as the JOLTS report. Economists expect to see there were 7.8 million job openings as of the last business day of November, slightly more than the number of openings in October. Still, job openings are continuing to run about 35% below the all-time high of around 12,000 reached in March 2022. Then the following day, Wednesday, ADP will release its National Employment Report for December. The consensus estimate is for the economy to have added 130,000 private sector jobs last month, which would be 16,000 fewer than in November. Other big news we'll be watching this week include the release on Wednesday of the minutes from the Federal Open Market Committee's December policy meeting. The quarter-point rate cut enacted at the conclusion of the meeting was the third decrease since September and brought the benchmark federal funds target rate down to 4.25% to 4.5%. Finally, this week, we'll get an update of how Americans feel about the economy as well as their own economic prospects when the University of Michigan issues the preliminary reading of its January Consumer Sentiment Index on Friday. The consensus estimate projects the index will come in at 74.5, just slightly higher than the reading in December. And while that would be the highest value for the index since April, it would again leave the metric below its long-term average of 85, which hasn't been surpassed in the last 3.5 years. Well, that's what we're projecting for the start of the year. Join us on Saturday when we tell you what actually happened. This is Devlin Steele for Augusta Precious Metals signing out.